Hey, everybody. I'm Carl Krauskopf, and I have dedicated my career to real estate investing with a specific focus on multifamily properties. Now, I've learned the tremendous value that these type of investments have to offer. And today I'm going to talk about my favorite topic, which is due diligence, performing due diligence on the asset itself. At another time, we'll talk about performing due diligence on the operator, the syndicator. That's a wholly separate topic. We're talking about performing due diligence on the actual asset today. Now, from a physical inspection, obviously, let's start at the very, very beginning of this. Physical inspection, that means we're going in and we're taking a look at the actual property. We're going to each of the units. We're bringing either a formal inspection company, or what I prefer to do if I've got the time, the capacity, and it's local and I've got the team in place is to bring all of my subcontractors, a couple different general contractors as well, and walk all of the units together so that way we can get a well diversified thought process, gathering the brain trust, and really put together a game plan in terms of necessary renovations, nice to have renovations, and ultimately what we need in order to renovate in order to execute on our business plan. Now, again, that's when I have the team in place, which is typically right now it's in Seattle, which is where I've grown my business. And, on my 12 unit that I just did, I brought in my subcontractors, my general contractors, property managers, and we walked through every single unit. We walked through the utility spaces, the common areas, the amenities, the storage, the parking, et cetera. And we looked at and felt every single piece of the property. So that way we knew what we were getting into from a physical standpoint. Next is the financial analysis, really understanding what's happening with your T12, your trailing 12 month, that's your profit and loss statement. That's going to detail at a summary level what's happening from an income, an expense, and how you calculate the net operating income. Next is your rent roll. That is how your actual units are spread out from a rent perspective, other income, what's being rented versus vacant. Also, any kind of delinquencies, and really truly understanding a clear picture of your top line of your revenue coming in. What I always like to do and encourage is, match up your rent roll with your leases and then your leases with your bank statements to make sure that we're truly collecting what the seller is saying is being collected. Now that's super critical. There's been a time before when I was going through a 32 unit analysis down in the city of Burien. I'll talk about another example on that particular property, but the seller and the broker were telling me that it was fully occupied and that there was this great economic occupancy that was happening. We were collecting lots of great money, great rent, great collection ratios, and then I got into the actual bank statements, the leases, and actually determined that one unit had not been collected for over a year and a half. And so this was on the tail end of the pandemic. We were past the moratorium from an eviction standpoint, but this tenant still was not being collected. So again, this was an opportunity to go back to the seller and renegotiate on the contract, because again, we were told one thing and the numbers told us something radically different. So really time consuming process, but really, really encourage you to get in there, look at all of the financial instruments and make sure it lines up according to what you know or what you think that you're buying. Market research, really understanding the local and the macro, obviously the regional, and then the local environment itself, and understanding zoning, any kind of use restrictions, any kind of anything that would necessarily restrict your ability to buy, operate, and eventually exit the property on the back end. When you go to sell or when you go to refinance and hold it, really make sure that what's happening in the city, in the county, in the state, in terms of what's going to be and what's going to happen and what's going to impact your business itself. Now, the example from the Burien property that I was just mentioning on the financial analysis side of things was that I was going through the analysis. We were making progress on the negotiations, and I was digging into the the city council notes, meeting notes, and found that the city was actually in the midst of passing a lot more rental restrictions around the property itself, or not just the property, but the city, and getting into a position where they were almost more restrictive than the city of Seattle's rental regulations, but they didn't have necessarily the tenant grade that Seattle had to offer. And so there was a lot started to be a lot more things mounting against the business case in moving forward with that property. That kind of bleeds over into the tenant profile. So understanding who your tenants are, and making sure that you're matching again your leases to your charges, your bank statements. Know that you're being paid for and what you're being paid against the leases that the tenants have signed. Understanding your current tenant credit as well as their deposits, and making sure that everything is trued up and makes sense, um, for you to continue to move forward. The last piece is legal due diligence, and that is really understanding what's going on with the title of the property. There's been times where, I on the front end of my investing career, special exceptions in the title report, didn't really know what that meant. Closed on a property that had an odd easement on the property. Luckily, it didn't really impact our my business plan on it, but it certainly could have, and it could have been a restriction, and it could have made it more difficult to build out that specific development. Now, again, since then, I go in through and I really truly understand what's happening. And if there's something that I have a question on, I go out and I either ask the title attorney on at the title company that I'm using, or I get referred out. Now, on my Brentwood Apartments, my 12 unit in downtown Seattle, this exact same thing happened where there was a special exception on the title report that talked about a particular easement that restricted the future development of the property. Now, I knew for me, I was not planning on developing the property. However, I wanted to make sure that I understood for myself and my investors that whoever would be buying the property, thinking about them and if they might want to develop the land itself. So contacted and contracted an attorney, a title attorney. We went through this long ordeal of essentially absolving a title on that easement, because it was an easement from the city of Seattle that was put in place 105 years ago. The apartments themselves were built less than roughly 80 years ago. And so obviously, the apartments were permitted to be built 80 years ago. So at a certain point, especially if there's no clear beneficiary of that easement, then there's some instruments that can be used. Obviously, consult your attorney. I'm not an attorney. I'm not giving legal advice. This is just my experience, and we were able to absolve and remove that item, that special exception from title. So that was great for me. That's great for my investors, and great for whoever could potentially want to buy the property in the future. Now, obviously, there's a lot more that goes into due diligence. I do have a 14-point due diligence checklist that is essentially risk free, meaning you can go through, these are the 14 things that I like to do on a property before I spend a dime, before I start paying any other service providers, before I pay anybody essentially on again, title attorneys, inspectors, etc. The 14 things that I like to do on a property to perform due diligence. And essentially you can do it in a 3-week time frame or less. So if you want that, shoot me a DM, comment below, send me your email. I'm happy to send it over to you free charge. And if this content, again, if this content is valuable to you, if you like it, if you want to see more of it, if you have questions, or if you want to see something different, please comment, submit questions, hit the like button, subscribe, and I would love to keep putting out more content like this for you. Help me make it relevant for you. Thanks, everybody.